Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is the earnings special edition where our focus is on Gujarat State Fertilizers and Chemicals. That's GSFCL's earnings. The company posted a sharp 89% drop in the consolidated net profit at 24.43 crore rupees for the fourth quarter, and this is due to poor sales. The income also fell about 16.3% at 2017 odd crore rupees. Remember, however, the company's expenses have remained lower at 1993 odd crore rupees for the period under review from 2105 odd crore rupees a year ago earlier. Now discuss with us the earnings insights as well as the outlook going forward. I'm now joined by the top management of the company. Mr. V.D. Nanavaty joins in. He's the Executive Director of Finance and the CFO of GSFC'S. Warm welcome to you, sir, on Business Today Television. It's good to have you with us. Could you detail for us the key reasons behind the drop in the top line and the bottom line first, because the company has said that this was a challenging year due to external headwinds in fertilizers and the industrial products. Could you detail for us what exactly were these headwinds that impacted your earnings? Sir, are you on mute by any chance? We can't hear you.
Yeah, 1 minute.
Yes, sir. Now we can. Please go ahead.
Okay. So the government of India reduced subsidy from October 23, but input price did not go down in tandem. In fact, it went up. So the margins were affected, as well as top line was also being subsidy being part of top line. So top line was also affected, and the margins were also affected. Plus some Red Sea issues delayed the raw material input in the Q4. So that also impacted production and sales. Otherwise, the growth would have been better. So these were the main factors. Plus, in industrial products, the uh, finished product prices remain a challenge because of a lot of exports from China. Since Chinese economy is not doing good, they export a lot of their industrial products to India at a very competitive price. So that keeps the Indian price also down, and in fact, so that put pressure on the margin. So as some of the economists are saying, we are importing deflation from China. So the importing deflation is good for the economy, but bad for the company. So these were the factors for Q4 performance. However, we remain optimistic. We see some 20% growth in current financial year in fertilizer volume, including the growth in Q1 this year.
This
And
is
some
20% growth you're saying, sir, in the fertilizer space? 20%?
Yeah, in FY25.
Okay, okay.
So we target to do some 23, 24 lakh metric ton against 19 lakh ton this year, I mean FY24. So along with that, we see some improvements in the overall PBT also as compared to FY24. So we see some improvements in the current financial years. Also, the subsidy rate for FY24-25 has been announced well in advance. So there is a kind of planning that can be done by the companies. What products will be beneficial, what will not be beneficial. So that advanced planning, procurement, everything has been possible because of timely announcement of subsidy rate from April 24 onwards. So that is also helping in better planning and better volume that we expect.
Okay, fair enough, sir. So the outlook is definitely positive and you do expect FY25 to be better than FY24 in that respect, since things are turning favorable for you. But all those concerns that you pointed out, demand scenario, Red Sea issues as well, are you seeing these concerns still impacting your Q1 and Q2 before things start to recover, or are things now done and dusted and you do not have any more impact to see in Q1, sir?
So the issue remains of say Red Sea, but now we know that Red Sea route is not available. So we should plan raw material considering longer voyage period. So that has been factored in. So we are taking advanced planning to ensure that raw material reaches us in time. So,
Okay. Understood, sir. So, what about your margins outlook, sir? Where are you at in FY24? How do you see things panning out in FY25?
Margin improvement at the present level of subsidy and input, we don't see much improvement. But post election result, if government looks at the problems of the industry, that subsidy has been very low, and some correction is taken place, that will help to improve the margin.
Okay, so largely it will be dependent on how the subsidy rate will be moving up as well, and that will really help you to understand whether the margins can be looked at an improvement from the current space or not. Even if there is some help coming in on that respect as your expectation, what could be the margin band that you could look at in FY25, sir?
So for fertilizer, around it was around 5 to 6%. So at least 1% improvement can be seen if some relaxation are there.
Okay, okay, sir. So, what about ammonia prices? What is the outlook there, since that is the key raw material for fertilizers and industrials? And if you could also detail for us, how much are you sourcing capitally? How much of it do you buy from third parties? And since you're talking about the imports from China as well, is that going to be a factor that you will watch out for?
Yeah, so ammonia is certainly a key raw material. So at Baroda unit, we produce our own ammonia. So we produce around 4.5 lakh metric ton ammonia from natural gas. So natural gas prices are stable. So that part, so ammonia cost is also stable. At Sikka unit, we import ammonia for making DAP and other P and K fertilizers. So the price has been steady so far, but there are some chances of improvement. Price is going to rise, in fact, going forward, but not to that extent that went up in 23-24. So it will be kind of range bound prices. So we, on overall basis, we see prices to remain at softened level throughout the year for the major inputs. So that is how the margin estimation can be made that it will improve little
Okay.
bit.
Okay. Sir, also on the product lineup, are you looking at any adding any new product categories this time around? What is your plan, since you did say that advanced planning can now be done? So you already have some idea as to what kind of products could you be getting into?
Yeah, so last January 24, we capitalized ammonium sulfate fourth plant. So on the basis of higher production from ammonium sulfate plant, we are planning higher volume in this current financial year of say 20%. Plus higher volume is expected from Sika production also. So that was the thing. Another on the chemical side, we'll be capitalizing HX crystal sulfate plant in this year. So that will help to improve our top line and bottom line. Plus, we will be commissioning uric acid fifth plant at Baroda unit. So that will also use the cost of sulfuric acid back from outside. Plus, we will be commissioning solar 15 megawatt plant. So that will help in reducing our current fuel cost. So top line and bottom line in form of cost saving is planned to sustain operation and be cost effective going forward.
Okay. So for this, are you also looking at any capex plan for the full year? And if yes, then any kind of funding requirements that you would have for FY25?
No, as you might have seen our balance sheet, we have a cash surplus of around 2200 crores. So we don't require any funding in short term, maybe 2 to 3 years. But along with in the investor presentation, we also provided our capex plan for next 5 years. So it is coming to more than 6,000 crores. So maybe in the fourth and fifth year, we may be requiring the borrowing from the market.
Okay. So for this year, how much will be the capex, sir, for FY25 out of this entire 6,000 crores that you're looking at over the next few years?
Will be around 8 to 900 crores.
Okay, sir. And that will be funded via the internal accruals. You're saying you already are comfortable on the cash books, sir. Okay. So, what about the caprolactam benzene spreads? Where is it at currently? Has there been any kind of a recovery on that, and what kind of band are you working with now for FY25?
So it is around $700 caprobenzene spread, and it is not improving significantly because of, as I said, a lot of caprolactam is coming from China to India. Recently, they added more capacities of caprolactam in China, and with their economy not doing good, a lot of export from China is coming to India. So the spread is not significantly improving. We were expecting at least $800 spread, but right now it is hovering around 700 only. Immediate future, we don't see any much improvement in this aspect. So we'll be, as I said, Catex crystal plant is a derivative of caprolactam plant. So now capro being kind of a commodity product, so expecting good valuation and good margin from them. I mean, those days are over now. So we'll be focusing on the value-added products in the capro chain. So instead of just selling a commodity, we will be targeting niche markets by converting into a better product.
Okay, understood that, sir. Well, thank you so much for speaking to us on Business Today and sharing all these insights. All the best for your coming quarters too, sir. Hopefully, we'll get more and better insights from you as we progress towards the end of Q1 and we have you back on Business Today. Thank you so much.
Thank you.
All right, viewers, we wrap it up at that. GSFC on the earnings as well as the outlook going forward. Some concerns to remain, but the outlook on FY25 definitely looks positive. It may be a better year going forward from here, but only after the election results, when the government is formed, there could be some understanding as far as the subsidy rate is concerned, and once that improves, then the company could be actually looking at improving the margins as well. So those are the kind of insights we are getting in. But for capex, that will continue from internal accruals. That's another point that the management has highlighted. Many thanks for viewing this special conversation. Hope it gave you insights into what the management outlook is for the company's plans going forward from here. We'll continue to get you such exciting conversations, and don't miss out on logging in at 12 noon when we get you your stocks addressed by top market experts on daily calls. It was a star